Take a look at your markets now. Asian equities were mixed on Friday as investors headed into the weekend, awaiting the release of U.S. jobs data, while traders kept a nervous eye on Washington as the Trump administration makes moves on a number of policy fronts, including trade. The week was a volatile one in any event, given Trump's initial move to levy higher tariffs on Canada and Mexico, which he's since paused on, while the imposition of an additional 10% tariffs on Chinese goods went ahead earlier in the week. The Nikkei share average declined by 0.72%. The Hang Seng Index rose by 1.09%, while the Shanghai Composite Index gained just over 1%. U.S. markets ended the session mixed, with the Dow trimming previous gains. Traders were focused on corporate earnings while also assessing President Trump's policies. The Dow Jones Industrial Average declined by 0.3%. The S&P 500 gained 0.36%, while the Nasdaq Composite Index rose by just over 0.5%. To local indicators now, we see currently that the all-share index is trading in positive territory. It's up 0.6%. The rand is trading at 18.41 against the US dollar, 19.13 vis-a-vis the euro, and 22.95 against the British pound. Gold is trading at $2,865 an ounce, platinum at $991 an ounce, while Brent crude oil is trading at $74.92 a barrel. All right, well, for more on the markets, I'm joined by Warwick Lucas. He's a portfolio manager for private wealth at Vunani Securities. Thanks very much for joining us, Warwick. So yesterday was the Sona speech. Were you inspired by any of the aspects of it in terms of addressing the country's growth challenges?
Well, I think that one of the things that stood out was hearing other political parties throwing stones from the side, saying that they thought it was boring, etc. Well, to me, that's actually perversely a good sign. I think that boring politics and the business of governing properly and appropriately should be boring. I hope that we will see more boring Sonas in the future. I think what was of greatest merit and importance there was the stance that the president took in relation to municipalities, which have been quite correctly identified as now the ground zero of the governance experience of South Africans in general, in terms of the problems that they have in their daily lives. And that is that municipalities have run around not really being accountable, not focusing on outcomes versus local politics, and this has got to change.
So it's been quite a volatile week, with market players initially on tenterhooks about the imposition of higher tariffs on Canada, Mexico and China. How would you characterize the week that was?
Well, you used the word volatile a little earlier, and that's pretty much on the mark. I think that if we look at the issues around the trade tariffs, for example, against the likes of Canada, I mean, we wring our hands locally about our certain friendships and how they could get us singled out for unpleasant treatment. However, I don't think that the likes of Canada, for example, or Mexico had any particular truck with either Russia or with Hamas, and they still got an initial 25% tariffs aimed at them. So I think it's important to remember that these are basically noisy times coming from the US.
Indeed. I mean, you alluded to it when it comes to us. I mean, it's been quite a week for South Africa and US relations, with Trump's administration making allegations about the country's landlords' laws and their implications. And then there was, of course, the announcement by the Secretary of State that he would not attend a G20 meeting here in South Africa later this month, saying that he didn't want to waste US taxpayers' money. How worried are you about this posture and how it may translate for South Africa economically and otherwise?
Oddly enough, not at all. And the reason is, well, first of all, when it comes to the expropriation issues, it's quite funny how, with the tossing out of these statements, the two protagonists locally are suddenly talking a lot more nicely to each other. So there's a perverse kind of unifying there. But more importantly, when we look at, oh, gee, I'm absolutely not going to South Africa, what he really means is that the government in the US is truly focusing inward. It is going to be the most inwardly focused US government that we have seen in more than a century, I expect. And that is where the focus is going to be. I think we've seen other countries get all sorts of offhand and at times strange treatment. And really, it all boils down to the same thing. The US is going to focus on domestic issues and global issues that go by the board. So as far as South Africa goes and the conduct of the G20 meetings, we just simply need to get on with it, not take it personally, and just meet with the rest of the world and carry on normally.
Interesting perspective. Lastly, just give us a sense of what you think will be the key market drivers for next week.
Right, so there'll obviously be the action after the markets in the US when we see payroll data coming out, which our markets won't do a full absorption of. I would remind viewers that payroll data in the US is actually always rather messy. It's not particularly well accounted for, particularly when you're reporting back on or cyclical periods in terms of weather and so on. So I would be wary of reading too much into them.
All right. Thank you so much for your time and insights. As always, Warwick Lucas, he's a portfolio manager for private wealth at Vunani Securities.